Transaction banking, that's important. Transaction banking, COVID-19 impact, trends in transaction banking clients during COVID crisis, digitization impact, credit losses will constrain banks' investments, Goldman Sachs in transaction banking. And COVID-19 crisis has apparently put an end to 5-year runoff growth for global transaction banking. As the pandemic spread during the first 6 months 2020, the global transaction banking business weakened the combined weight of the whole world shutdown, disruption to corporate supply chains, and coordinated actions from central banks that may have saved the global economy but delivered a body blow to banks' profit margin in the form of ultra low interest rates. Driving results for first half 2020 in global transaction banking were a 12% reduction in cash management revenues and a 7% decline in trade finances. The one bright light in the business was supply chain management, in which the revenues grow 4%. So revenues have grown in the supply chain by 4%. Transaction banking trends, if you look at, cash is king. The outbreak of the crisis triggered a rush for liquidity, with the companies drawing down the revolvers, establishing a new credit lines and aggressively tapping government-backed lending schemes. In retrospect, much of the borrowing schemes to have been prudent and cautious cash management in the face of uncertainty about the cash flows, at least among the large corporates. Much of the borrowed cash has found its way back into the balance sheet of lending banks. But credit helps too. The companies are seeking financing solutions that address the specific needs arising from the crisis, whether that means factoring for companies with immediate cash requirements or inventory financing for companies holding more inventory due to slowing supply chain. But credit helps too. Companies are seeking financing solutions that address their specific. Transaction banking trends in transaction banking clients during COVID-19 crisis. Long-term capital can be a lifeline. Throughout the crisis, corporates have been able to find relief from long-term capital rises, predominantly through debt issues, but occasionally with equities. Corporates are using proceeds from the issues to term out existing loans, capture relatively more stable and lower cost of funds. In quarter one, issuance came mainly from investment-grade corporates. Later in first half, lower rated companies entered the market. 45% of the Asian equity corporates said disruptions caused by the COVID-19 crisis are forcing them to re-evaluate their supply chain strategies. Companies' need for support in this area explain why the supply chain management was a segment of GDP that grew in the first half. So that demand should persist for the rest of the days to come. So long-term capital can be a lifeline. You cannot have short-term capital. So if you look at European, Asian corporates, disruptions are caused by crisis are forcing them to re-evaluate everyone's supply chain. So it's all happening in the marketplace. Digitization impact. Cash management is already heavily digitized, with most of the banks are straight-through processing in as good as 90%. Trade finance, by contrast, remains a highly manual, paper-based business. Here, the main challenge is simply automating manual processes. To do so, banks are experimenting with new technologies like cognitive optical character recognition, and artificial intelligence to automate document checking and other processes. Across both business, banks are spending in the range of 2% to 5% of their revenues on digitizing and broader transformation on the following: core technology replatforming, replacing legacy technology with innovative technology, including cloud-based applications, microservices and technology stacks, and enabling API connectivity. Developing new customer propositions, rolling out new products and solutions, new market infrastructure, adapting to open banking, deploying distributed ledger in trade finance, and adapting to central bank digital currencies as they emerge in different markets. Banks' ability to, or constrain, if you look at the credit losses will constrain the bank's investments. Banks' ability to invest in technology will be affected by the fallout from the global pandemic. Banks around the world will incur an incredible 2.1 trillion in credit charges in 2020 and 2021. Again, they're talking about 2.1 trillion. Most of the banks have the capacity to absorb the amount without having to raise new capital. Banks can take steps to protect their profitability, but it's inevitable that the returns will be compressed in the near term. You will have compression. However, unlike the case 2008 and 9, do not expect to see major changes in the bank strategy, such as the wholesale existing products of business. Rather, banks are likely to continue their long-term shift towards more stable fee-based revenue streams while trying to manage problem loans as efficiently as possible and improving cost efficiency. If you look at Goldman Sachs in transaction banking, last year, October, released software that allows clients to embed banking services into their own products. The strategy could help Goldman jumpstarts its push into transaction banking, which has lagged consumer technology in ease of use. The move is a part of the CEO's David Solomon's broader expansion into the corporate and consumer banking. Steady business that will broaden the firm's revenue base away from volatile trading. Goldman Sachs has launched a new cloud-based digital transaction banking services powered by Volante Technologies. So, launch a new cloud-based digital transaction banking. Volante WorldPay Systems sits at the core of the new Goldman Sachs systems. It covers end-to-end processing of domestic and international payments. That's very good. This includes foreign exchange, US wires, ACH, SWIFT cross-border payments, and other payment rails. Goldman Sachs' new systems describe Volante as an industry first, claims to be nimble, secure, easy for corporate clients. Volante has become the client of the platform. So plenty of opportunities. Goldman Sachs leads the way on transaction banking, and you will have constraints in terms of provisioning. Multi-trillions will be the provision in the banking systems. Digitization is impacting trends in transaction banking clients during the COVID. Also, long-term capital is required for them, and cash is always important, but you need guarantees at times from the government side. COVID has impacted the overall revenue terms, and supply chain has done extremely well. Revenues have grown for supply chain, and that's logistics as well as supply chain is going to be the major business till the pandemic is completely over. When the pandemic is over, till the last person gets vaccinated on this planet, pandemic is not going to be over. You have mutant now. So it's not over. The second wave is on. People say third wave, better we manage to bring in high level of discipline around the world in terms of living style. And that's the message.